So the month just ended, and of course, if you're still trading, you're literally in the last bar of your candle for the monthly season. So it's good you have a view and a review of what's been happening, and that is what this entire video is all about. So let's head right into it. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. Firstly, we have the review box, right? I want to review everything we have right here on the calculator. This is my calculator in case you're new to the channel. I've been using this calculator for almost a year now, and it really does a lot. It just picks up all the fundamental news. Not that it picks it up by itself. I take it, I put it in here, and then we have scores, which is bullish, which is bearish. The higher the percentage, the more bullish it is. The lower the percentage, the more bearish it is. At 50%, it is literally neutral. So we're seeing a lot of neutral space here. Now, mind you, this is the overall page. And again, I like to tell people, because I know there are a lot of new viewers, the overall page is all about every goddamn news that has been released, put together. So for each news that has been released, the latest of every news released for that particular asset put together, that is what the overall is. Then we have the 14 days, right? 14 days is in the last 14 days, all the news that has been released in the last 14 days calculated into proper sum. So let's head right into it. Now we have Australian dollar giving us a 41% overall. How come? Like, how is it 41% overall? They're all in the neutral zone, if you notice. Now, central bank details, like all the central bank details, the latest release of all, whether it's 2 weeks ago, a month ago, 1 year ago, together, is screaming bearish for the Australian dollar. That is like bad news, right? That is like literally bad news, because central bank screaming bearish for any currency is as if it's trying to say the economic leaders feel like their currency is weak, hence they are going to be trying to do other things to make it strong. That's literally what central bank being like, two bearish signals. But then again, even though the central bank news is weak, we have employment data real good. We have economic data just above the average. Sorry, employment is not even really good. At 40% is not good. We need to boost above 60% to be really good. We have inflation data, absolutely good. Now, they don't have balance credit and energy news. They don't have bond news, but they have consumer confidence. And the consumer confidence, well, they are not so confident. But you know, there's something surprising about the Australian dollar, right? In as much as it is not having like real good news in so many places, if you check the chart of Australian dollars against so many other currencies, people are buying in there. And it's not as if people are stupid. This is the thing about Forex. Forex is a comparison game. If this one is better than this one, by even a tiny bit, you go for the better market. It's that simple. And that's what happens in the Forex game. You see one thing that makes this guy a slightly bit better than the other guy, you go for this guy. And you're going to see that all through the whole space. Now, we have the Canadian dollar at 40%. Just by a mere eye view, what did I just say? You should be running into the Australian dollar more than you should be going into the Canadian dollar. That's simply what it means. Why? Because it's just almost 1% better than it. And that is a huge thing. Anyway, put that on the wayside. Let's see what the Canadian dollar has for us. The central bank news is real good, right? The central bank news is good. The employment data altogether is where we have a similar situation. Now, understand this about economics. If there is bad employment data, right, meaning either people don't have jobs or, yeah, basically people don't have jobs. That's what it means. If there's bad employment data, there's likely going to be bad economic data over time. Why? Because if people don't have jobs, people can't buy things. If people can't buy things, people can spend. If people are not spending, there's no economic activity. Basically, that's what it means. So wrap that all short. We have bad employment data, and we can see the economic data at 51%, moving slightly good, even though they have bad employment data, meaning the guys who have jobs are really spending high to keep the economy afloat. Followed by that, they have the inflation. You can see the inflation dipping down slowly, meaning things are getting quite pricey for the common man especially. And then we have balance data. Unlike Australian dollar, the rest of them, they have balance data. And what is balance? Well, balance is all about the economic money available for the government, right? The government is talking about their balance sheet. And over here, you can see the balance sheet is at 25%, meaning all the news they've been getting regarding Canadian dollar is not saying good, good, good. It's risky. Consumer confidence absolutely dead. Consumers are not like they're not happy at all. And then speculative positioning. I think that's something for the last part of this. I won't talk about it yet. Then we have the Swiss franc. The Swiss franc surprisingly has one of the best economy. It's a miracle. Like I said, I always say this in so many videos. This is one of the most stable economy in the world. The Swiss franc, the Switzerland, they are like mostly always stable. Other countries, other economies are going up for a time, become so volatile, then soon they drop extremely low volatility, then they go up again, very volatile. But when it comes to the Swiss franc, they are not running away from that volatility, neither are they running too low away from that volatility. They're always in that central lock point. It's like a very stable camera. You know the chicken head when you're tilting the chicken like this, the way the head is looking. Yeah, that's what the Swiss franc is like. So they have just good central bank news, good employment data, good economic data, not so good inflation data, but real good balance sheet, like absolutely good balance sheet. And then consumer confidence, strong. And that's one thing you need to always think about. Consumer confidence is very strong there. We have the European economy, we have their central bank data not standing so strong, right? It's neutral, somewhat neutral. Then their employment data, just top notch. Like they finally dealt with economic crisis. Like employment is going good, right? So people have jobs. Like according to the data, right? People have jobs. Then the economic activity is around 38%. Trying good, trying good. Inflation, now that's where there's a problem. Europe has inflation, mad as inflation. 13% on the map. And when I say 13%, it doesn't mean like they have 50% inflation. No, I'm saying the entire inflation data when rated using this my strategy. This is like again, it's my own calculation, right? My own calculation, it's very, very abnormal. The closer to 0%, the very bearish, the more bearish it becomes, the closer to 100%, the more bullish it becomes. And this is 13. So that's like really, really close to the bad side. You get. Then the balance sheet. Another king on the point. Credit, we don't want to talk about that. They don't want to talk about that. But moving on to the last thing, the consumer confidence. Well, consumers are literally stuck in the middle. This is across all data, whether it's old or new. That particular news, old or new data, right? British pound, we have 42% in general. How is that moving? Well, it's coming from the fact that central bank is not so good right now. All the central bank data are not so good. Their employment also is there's a gun right there in the neck, right? They have like terrible employment data as of recent. Now, the economic data, right? The economic data is slightly above, slightly above the good, just tilting out of the good side. Same thing with their inflation. They have like quite good inflation stance, but their balance sheets, real good, still good, like real good. They have real good credit. They even have slightly bad bond, but again, consumer confidence, dead, real dead. Japanese yen, we have 43%. So they are literally sliding into the bad zone, the Japanese yen. Like they are literally sliding into it. And this is not the charts. This is just economic data released in all since last year, since January 1st, 2025. The central bank data is flatline. Like the central bank is literally keeping the bar on the hook, like right in the middle. But the employment data is beginning to, take a nosedive. It's diving slowly. While the economic data, the economic activity is good. Recently, according to their data, they have good economic activity. They have flatlined inflation. Inflation is not bad. It's not good. It's just neutral. Balance sheet, big gun, right? Big gun. When I say big gun, I mean bad, very bad, very, very bad. Their consumer confidence is low, very low. Their bond market is taking a hit, like strong hit. You get it. Forget about the speculative positioning. We're going to come back to that. We have the New Zealand dollar. Here we have 47% in general, right? The central bank, they're taking small jabs to the stomach, right? Small jabs. Not really like strong, but small jabs. Then employment data, well, they are kind of real good. Really good, man. Like 72%. That is real good. Economic data is similar situation. Real good. But their inflation data, smoking gun, right? Smoking gun. Same thing with the balance sheet. Not so good. But their consumer confidence, well, they have like quite positive consumer confidence. Quite positive. Moving on to the US dollar, we have, now this is the big guys. They have every single news. Every single news. But then again, central bank data says, we're sliding into the bad side slowly, probably sliding out or sliding in, but they're currently around the bad side. The employment data, on the other hand, they got you. They're good. Economic activity is showing good strength. The inflation, well, surprisingly, they have actually good inflation data. Surprisingly, the glorious US, and that's good. But the balance sheet, man, that's where the guns come out, like, shoot everybody down. But their credits, on the other hand, it's good. Good. Energy production for the US, another news for another day. The consumer confidence, well, not really good. Not really good. That's the fact. Not really good. Their bonds also, similar situation. That is all for the entirety of all the news. But now let's talk about what really happens in the last 14 days. Because trust me, seeing the news is one, like the overall, but seeing the 14 days, that's where the miracle happens. Like the 14 days is where the miracle happens. What has been happening recently? That because that's where the market is really moving from. I know they released news in 1960, doesn't move the market today. They released the news this morning, that really moves the market today. And let's take a good look at it. Well, today, or rather in the last 14 days, the Australian dollar has down 33%. That's bearish. You can clearly see it right there on the book. Bearish. Why? Central bank data, literally in the news. Dying. Then we have employment data, another news, around the neck. Dying. The economic activity, well, that's not so bad. They just took out the news from the neck and it's still trying to breathe. Then we have inflation. Surprisingly, their inflation is top notch. Like they're literally keeping that inflation on lock it down. Balance, credits, energy, confidence, and bond. No news. No news. We move up to Canada, right? Canada. Bearish too. They don't have any central bank news recently. They don't have any employment news recently. But the news they had, the economic activity, the inflation, and the balance are all below 50%. That prints, right? Just one direction. It's not going so good, basically. Then we have the king, the Swiss franc. Man, these guys are bullish. How? Central bank news, great. The employment data, absolutely at the top notch. They're hitting it real good, meeting and surpassing all expectations. Coming to economic activities, they are not so far away from the power, but they are moving good in the good side. Their inflation data, on the other hand, showed bad move. Bad, very, very bad move. But their balance sheet and their consumer index, these guys are good. Then we have euro, right? Euro, bearish. What news came out? Central bank news, quite bad. Economic activity is quite good, just okay, moving a little bit from the bad side. Inflation data, bad man. There's a gun taking a punch to the face, right? The balance, real good balance. The credit, bad credit. Consumer confidence is weak, man, real weak. Then we have the British pound. Now, British pound, euro, Britex, whatever it is. But British pound, we have a neutral stance. Neutral. How is it neutral? Well, the employment data said bad news. The economic activity is saying good news. The inflation data is saying okay. The balance sheet is saying good news. Consumer confidence is literally dead. There's a mixture, there's a mixture, mixed everywhere. Then we have the Japanese yen, right? The Japanese yen, neutral too. How? Economic data is good. The inflation data is just a little bit above the average. The balance sheet, gone. The bonds, another gone. The news for the NZD is neutral. Like the bearish side of the neutral, not even like the neutral, like the downside of the neutral. We have central bank news at 30%. not really good enough. We have the economic activity at 60%, just like going good, going good. And then we have inflation data. Bad news, right? Bad news. Consumer confidence, literally flat line. Then we have the USD dollar, the givers of all. And they are literally on the flat line, 49.6%. Basically, flat line, neutral grounds. Right? Central bank news, not so good. The economic employment data, economic activities, and inflation data actually are really good. Like, for real, man, these guys they're keeping up. They're really keeping up. But the balance sheet is bad. The credit score, good. Credit news, not credit score. Credit good, news, good. The energy, bad. Consumer confidence, not bad. The bond, another bad. And that's it. So why didn't I talk about speculative positioning? Well, speculative positioning is all about speculators. And they are literally looking more into the Australian dollar, the CAD, and the New Zealand than any other thing. So you can put your mind in that space and say, okay, well, you could follow the consumers, you could follow the retail traders. But however, I got something for you. I want to show you something new. Just one last thing for the day. I want to dive into the A1 trading space. This is a space owned by Nick Sayak. He's a forex trader online, Nick Trader. Trader Nick or Nick Trader? Trader Nick, yeah, Trader Nick. And he does real good videos. Like, he analyzes the market fundamentally. Really, really good. So let's take a look at retail sentiment. Now, for those of you who don't know what retail sentiment really is all about, it's more about what is the mindset of the retailers. And you all know the retailers are the ones who are left hanging with the bag. Meaning, if the retailers are the ones who are left hanging with the bag, you want to be trading against the retailers. So looking at this whole situation right here, we're looking at what the retailers are doing in the forex market. Now, the chart, right, the bar on the right side is all about what the retailers are doing. And the contrarian sign is telling you, taking the opposing side of what the retailers are taking. And looking at it right here, we can see that the retailers are going all in the Euro Swiss franc, like they're literally buying crazy. Things like the Euro Swiss franc, the British pound Swiss franc, the Canadian Swiss franc, the US dollar against Swiss franc, and the New Zealand dollar against Swiss franc. Basically, the retailers are trading against the Swiss franc. And I just showed you something. That is absolutely clear. The Swiss franc had one of the best last 2 weeks, and yet retailers are just going against it. In fact, look at the whole chart. It's the best. For retailers, well, they love to go contrarian, right? They like to go against the market. They like to go against the news, and they are looking to short that pair. Matter of fact, you should be buying any of those pairs if you smart guys, right? You smart guys. You clock it, you should buy. Now, those are the top things that are going against. What are they now going for on the other end? Well, looking at the bottom of the screen, you have the ones in the blue. Those are the ones that you should be buying, right? You should be buying. Thank you. The ones of Swiss franc you should be selling so that you could be buying the Swiss franc, selling the other currency. For the ones at the bottom, you should be buying, meaning you're buying the base and selling the quotes. The ones at the bottom, we see again Swiss franc. Forex traders or retail traders are ditching the Swiss franc. And that is by far the best thing you should be buying. Look at it at the bottom right here. Swiss franc against the Japanese yen is a strong buy in terms of retail sentiment. Like, if you're going against the retailers, you should be buying the Swiss franc against the Japanese yen, the Australian dollar against the New Zealand, the European dollar against the British pound. Again, I like to return back to this setup. The British pound gained better than the European dollar in the last 14 days. But on the overall stance, right, I'm going to zoom this in because I really want your eyes to take a very good look at this. Right? Take a good look at this. On the long-term stance, the overall stance, the British pound is 51%. So yeah, the European dollar is 51%, roughly almost 52. And the British pound is at 42%, roughly 53. You should be standing on the European side. Even though in the recent days, they have been using strength recently, right? They've been losing strength, but they haven't lost enough for the British pound to stand against them. And you can see it right here. Take a good look at this again. This is, I'm going to just select specifically the euro against the British pound so that you can see it clearly. Maybe it is squeezed between these things. That's why your eyes may be paining you. So let's take a good look at it. You see that? The retail traders are literally 79% mindset. They're literally going to buy the pounds against the euro. Advice: if you want to go against the retail traders, you should be buying the euro against the pound. You should be buying the euro against the pound. Up next, after that, is the New Zealand dollar against the Japanese yen. You should be buying the New Zealand dollar and selling the yen, and you should be buying the Australian dollar and selling the US dollar. Now, let's take a good look at this on the chart, right? On the chart, that is the last space. Now, we're just going to be looking at the monthly and weekly view, right? The monthly and the weekly view. I don't want to go in too much in depth, like review much like that. So let's just go in monthly, weekly. Now the month ended, right? The month just ended, and you can see the month was a bullish month. So if you're buying the Australian dollar against the US dollar, which is the last thing we just said, you literally should be saying kudos to your portfolio. You're making money, right? Now let's move on to the next guy, the euro. You can see it's been quite not so much good move. It's not far away from the starting of the month. I mean, zoom in here. That's the open, that's the close. Just a very tiny drop. Very tiny drop. Euro against the dollar. Then we have the British pound against the dollar. You see a clear, not so clear, but a clear drop on the monthly, right? On the monthly. And how did the week end? Well, obviously it's going to be bearish movement, right? It's still going downwards, looking for support at the bottom. They might get good news and suddenly it goes up again, right? But the New Zealand dollar against the US dollar, it was a doji month, right? Doji month. The US dollar against the Canadian dollar, well, it was also a doji month, slight move against each other. It means that this month was not extremely volatile, as you can see. Looking at all the USD pair, there was not like much volatility, except for the British pound. The British pound is where we had like good volatility in the last month. That is this month being February. The Canadian dollar against the Australian dollar, absolute volatility. You can see that large candle. I know you guys are used to green and white. I'm used to black and white. Sorry, green and red. I'm used to black and white. So black and white, real good moves. The Australian dollar, Swiss franc, not so much moves, but there was move, like good. We have the Australian dollar against the Japanese yen. Great move for the Australian dollar. As you can see, the Australian dollar is winning in almost all cases. And against the New Zealand, that was a killer move. If you were trading this, your account should be in killer profit, if you were buying anyway. Swiss franc against the Canadian dollar, this is just standing in one place. The CAD against the yen, doji month. The Swiss franc against the yen, not so doji, small hammer, very tiny hammer. The Australian dollar and the euro, euro against the Australian dollar. Now, again, the Australian dollar is clearly saying it's got investors. You can see right there. The euro against the CAD, literally flat, like tiny move, literally flat. The euro against the Swiss franc, small move in the bearish angle, going more for the Swiss franc, more strength to the Swiss franc, right? The euro against the New Zealand dollar, that's everybody keep quiet. That's what it means. It went up, it went down, came back to central. The British pound against the Australian dollar, clearly it's one thing that's just going on right here. This month was an Australian dollar month. That's what it is beginning to see, right? That's what I'm beginning to see. This month that just passed was an Australian dollar month. In fact, the last 2 months, basically. Because if you look at the charts we've been looking at, like you could go back to videos and look at it. I'm just going to ask you this question. Which currency do you think literally had the best strength in the last 2 months? Because from what I'm seeing here, I'm going to give you 3 seconds to answer that quiz question. Well, if you've dropped your answer, I'm just going to tell you right here. The Australian dollar definitely had the strongest move these previous 2 months. Like it literally moved the market. The British pound against the Canadian dollar, there was good move. Better moves than we had seen in the last 4 months. This is 1 month, 2 months, 3 months. This is the 4th month. Last 3 months, actually. Better move since the last 3 months. So, real good move. The British pound against the Swiss franc, better move than in the last 1, 2, 3, 4, 5, 6, 7 months. The British pound against the Japanese yen, doji. The British pound against the New Zealand dollar, dipped for the New Zealand dollar. So what does this say? The British pound, the euro, they are not so strong against all the pairs as of recently. They've been losing strength. The New Zealand dollar against the CAD, flat line. But against the Swiss franc, there's also flat line. Against the Japanese yen, another doji. And then finally, we have the euro against the British pound. This is the place where I told you, right? Euro against British pound. You see a clear bullish move. Remember what we saw here. We had retailers doing what? Buying the British pound. When clearly on the chart, Britain, euro is winning. I don't know what you want to say, but you can follow the retailers all you want. You could be a retail trader, but I'm tired of being one because that's me losing money every day. Every single damn time. Actually, not really all the time, but a lot more than necessary. So that's all for today. We've seen the market, we've seen the fundamental stance. During the week, we're going to see what we plan for next week to look like, right? We're just going to see that maybe tomorrow, make a video, and it's going to be a very good one. Without further ado, I'd like to tell you, hit the subscribe button, click the like, follow, because you really need to follow, man. There are a lot of things that are happening in the market that you need to always follow up. See you guys in another one. Peace.